IVM.
Hey everybody, welcome to another week on the IVM Podcast Network. As I mentioned last week, we're going through this COVID-19 outbreak, and because of that recording schedules, we're trying to keep them, but it's a little uneven at this point in time. Beg your indulgence. While you are stuck at home, I think one thing that might be interesting to do is maybe check out some of the complete series that we've done. The Kulaba Cartel, Woody Woodpecker, Cricketwala Chronicles. These are limited series that are complete. Might be a good time to check out those. Also want to thank our sponsors this week, HDFC Life and Paytm Money. And with that, let me get you onto your show and stay safe, everyone.
Welcome to All Things Policy, a daily podcast by the Takshashila Institution. We are a bunch of policy nerds based in Bengaluru, and we like bringing fresh perspectives to Indian affairs and Indian perspectives to global affairs. So grab a cup of coffee, sit back, and join us for today's chat. Hello and welcome to All Things Policy. I'm Manoj Kewalramani, and today I have with me Nick Marro. Nick is the Economist Intelligence Unit's lead analyst on global trade issues. He also serves as the EIU's Asia team, as the lead analyst for China and Macau, as well as a supporting analyst for Taiwan. Today I have Nick with me, and we're going to be talking about, we're going to try and do a deep dive into the Chinese economy, trying to understand what drives the economy, what's this growth about, what's high quality growth about, and we'll talk about the impact of the pandemic and the shutdown that we've seen in China over about 2 odd months and the gradual reopening, and how all that sort of plays out in terms of the broader economy and what are the political implications of all of that. So Nick, thank you so much for joining me on All Things Policy.
Thank you for having me.
All right, so Nick, we're going to begin straight up with looking at some of the basic sort of building blocks of the Chinese economy. The conventional sort of view is that China is world's sort of manufacturing hub, it's the world's factory, and exports have driven the Chinese economy, and therefore it's extremely dependent on demand internationally, particularly the West. But there's sort of much more to it, and the government has been trying to move towards consumption and other things. Can you tell me what are the basic drivers of economic growth in China today?
Yeah, sure. Definitely the idea around China being the world's factory is still something that's pretty prevalent in terms of people who are trying to understand the Chinese economy. But that story has changed quite substantially over much of the past decade and a half. Really, if you look at GDP by expenditure, the biggest component of GDP really is consumption, and that is private and government consumption kind of combined, with investments also a pretty big driver of economic performance. Exports are still important. In 2019, we estimate that exports accounted for about 19% of GDP. But when you look at, I guess, the mathematical calculation of GDP, so consumption plus investment plus net exports, that is exports minus imports, the total support from the external sector was less than 1%. And so a lot of this activity really is being derived from what's going on in the domestic environment. That is really the consumption and the investment story. And that is, I think, when you're looking at the Chinese economy right now, in terms of asking the question, how quickly might it rebound from the current pandemic, it's really those components which are going to be quite critical. That said, I don't want to underplay the importance of exports. Exports are still a very important driver of manufacturing activity and industrial activity more broadly. That has consequences for things like employment, income growth, things like that. So the global trade environment, the global demand environment is still very important for China, but it's not the sole thing driving the Chinese economy, and it's definitely a shift from how the Chinese economy functioned 20 years ago.
All right, so I want to talk a little bit about investment and consumption. Investment has been sort of a boost for the economy because we've seen lots of money going into all sorts of projects, and some of which there are serious questions about the productivity of some of this investment that's been done, given the fact that we've seen ghost towns, overcapacity, so on and so forth. And there's also been a debt buildup that's happened, which is partly a product of excessive investment, which has not been necessarily productive. Can you tell us a little bit about how that's played out and what are the challenges in that context at the moment? Along with that, consumption, given that things are, gradually getting up and gradually starting up, and this shutdown will sort of impact employment going forward and so on and so forth. So what's the role of consumption right now in this context? I mean, these two seem precarious, right?
Yeah, sure. Both components, consumption and investment, are quite precarious. I'll talk about investment first, and then I'll move on to consumption. The issues you outlined around investments are quite critical to the Chinese economy, and a lot of this is a consequence of the policy rescue package that China adopted following the global financial crisis in 2008, 2009. That stimulus package led to a ton of essentially resource misallocation. We saw a lot of support for traditional industries, particularly those tied to infrastructure construction, but that led to the issues you highlighted. Problems with overcapacity, problems with these very high debt burdens, and increasingly strained levels of productivity, particularly because a lot of these issues have come from the state sector, and the state sector continues to occupy a very, very large part of the wider economic framework. Challenging that or addressing those challenges has been quite an important policy priority for the government, particularly since Xi Jinping came into power in 2012. We've only seen modest, really kind of progress on this front. We can go into this a little bit later, but we were starting to see a bit more brighter prospects in terms of addressing all of this in the period around 2016, 2017. But as we know, in 2018, 2019, we started to see trade tensions with the US flare up. That derailed a lot of policy agenda. And then now everything happening with COVID-19 is adding an existing challenge to all of that. And so even though authorities are very much aware of these problems with resource misallocation, high levels of debt, unproductive investment, it's becoming increasingly challenged in the grand scheme of things to address all of this. If you look at the consumption story, what's been really quite interesting is we have seen quite a positive story here, positive narrative here in terms of the growing strength of the Chinese consumer. Back to the earlier point we discussed in terms of China being the factory of the world, in the late 1990s and early 2000s, the conventional wisdom was that you open a factory in China, you use cheap labor to make manufactured goods, then you export it to the rest of the world. That logic among U.S. corporates, and not just U.S. corporates, foreign corporates in general, has changed quite dramatically. Companies are much more in China for China these days. They're looking to tap the potential offered by Chinese consumers. And that's a story that we're looking at very closely. And despite all of the disruptions caused by the coronavirus, we are expecting the consumer market to remain relatively robust in the longer term. And that's going to be, I think, one of the more positive stories in terms of China's growth model moving forward.
Okay, so before I get into sort of a deep dive into the coronavirus and its impact on the economy and all of that, one more basic question. And I get this question quite frequently because when I teach a course in China and every time I sort of talk about the economy, people ask me this question about the shift in the principal contradiction that Xi Jinping outlined in 2017 during the party congress. And essentially, I mean, it's a lengthy statement, which I don't entirely recall, but it's about meeting the people's needs for ever growing better life and so on and so forth. But the idea is that he's saying that I'm going to go from high growth as my sort of bottom line metric for the party's sort of efficient sort of development model is high growth. Now we're moving to high quality growth, which entails much more than just the GDP numbers being high. How successful has he been in doing this, given that it requires a change in incentive structure across the bureaucracy? Because it's not just the top that needs to shift its view, it's also the guys working at the sort of grassroots level, right?
Yeah, exactly. And I think if we look at the success, it's been relatively mixed. And what you just outlined, I think, is quite critical. I mean, the economic performance in China, a lot of that is delivered at the local level, whether that's via the provinces or the major cities. And for a lot of local officials, their career trajectory is contingent on delivering high levels of economic growth. Those metrics have been evolving over the past couple of years. We've seen more of a focus on promoting environmental sustainability, job creation, bringing in investments, widening the tax base, things like that, which in theory should lead to a more sustainable economic model. And I really think sustainability is the key word here, this idea of moving away from unbalanced development. But in reality, it's been very difficult for the government to move away from the growth target. And that's both true at the national level, it's true at the local level. I mean, this year, before all of this craziness around the pandemic started, there was a lot of political pressure on achieving what China has called, a moderately prosperous society. So in Chinese, 小康社会, which essentially assumes the doubling of 2010 real GDP levels by 2020. And so that inherently attaches a numerical component to guiding growth. And so for all of the discussion we've seen on moving towards other metrics, it clearly looks like that's still very much on the policy agenda. Now, that being said, over the past couple of years, we have seen some improvement in this area, and we should give China the credit where credit is due. I think most obviously has been in environmental protection. So we have seen quite a strong push towards, say, moving towards renewable energy sources or cutting down high polluting industries or reducing overcapacity in high polluting industries to bring down emissions. And we have seen some pretty genuine progress there over the past couple of years, both from the data and then just anecdotally talking to people who live in China. And I used to live in China, and you can see the difference. That said, the slowing economy, with growth coming under pressure last year amid the trade war, and now growth coming under significant pressure amid the COVID-19 shock, that threatens to really undo a lot of this progress. Because when you think about some of the more critical elements that the government is concerned with, namely employment stability or ensuring that companies don't go bankrupt, that is going to inevitably draw attention away from, say, improving the environment. And so these policy objectives are really quite complicated right now as a result of these external factors, which domestic officials have pretty limited control over.
All right. Okay. So let's just get to these sort of factors that have now come into play. Let's just get to this sort of black swan event, which was the outbreak of the coronavirus, and which is now a pandemic. I've been sort of tracking what you guys have been putting out, and I remember in January when the sort of lockdown began, a little around that time, you guys put out a note in which you said that you had a set of scenarios, which is sort of ranking it from the worst to the best case scenarios, and your tentative sort of sense was that, if things get controlled by March, there could be a minimal hit. The first quarter for the GDP could be bad, but there'd be a minimal hit. And your yearly outlook in that case was about a 5.4% GDP. March 18th, you had a new note in which you revised that GDP outlook for 2020 to be 2.1%. Firstly, I want you to sort of run us through why you've revised that outlook so sharply downward. And secondly, what are the sort of scenarios that you guys have looked at, and what do you see playing out going forward?
Sure, yeah. And I guess I'll preface this as well by saying that since March 18th, we've actually come out with another revision to our forecast. I think we're not alone in terms of the forecasting houses doing this, but just so you all have the most up-to-date information, we are now calling for 1% growth on annual average for China in 2020, which, as you know, and as any of the listeners will know who have followed China, a couple of months ago, 1% growth would have just been inconceivable. But really, one of the biggest reasons why we prompted that revision is we are expecting a pretty severe contraction in economic growth in real year-on-year terms over the first quarter of the year. And our assumptions, essentially, to be frank, we underestimated the impact of some of the shutdowns and quarantine measures, forced transport restrictions that had really brought the economy to a standstill in February. And so it was really once we had that data in February that prompted this rethink. I think what's important to mention as well is that there's always been this question around whether data in China is believable. I think people still need to continue having that discussion. But what has been somewhat encouraging, actually, is that up until now, statistics officials have actually been quite forthcoming in publishing data which looks believable. And that's important in terms of mapping out not just the shock to China, but the shock to the global economy. And as part of the revisions to China, as well as the spread of the international pandemic to other major markets, we're actually expecting a global growth contraction this year, 2.3% in market exchange rates. And that, for comparison, in 2009, due to the global financial crisis, global growth contracted by 1.7%. So the intensity here this year, we're expecting to be a lot more severe. Now, in terms of the scenarios, this essentially does match more of our pessimistic scenario, essentially assuming that any recovery that we see in China is going to be quite gradual. The second quarter, we are expecting to rebound very slightly into positive territory. But with the spread of the virus to the US and to Europe and other major markets, that is going to constrain a lot of export activity. And that's going to hurt a lot of strength that could have otherwise been lent to Chinese manufacturing, Chinese industry, Chinese investment that would have otherwise helped support the economy. Now, what I mentioned before in terms of investment and consumption being a lot more important in terms of the drivers of the macroeconomy, that still holds. But I think what's really interesting and we saw this come out as part of the shocks from the trade war, is the impact on sentiment that international developments has on in China. So in China, in 2019, for example, exports fell. Imports fell even further, so the actual drag from GDP wasn't that severe. But because of the uncertainty in the international environment, we saw investment and consumption really come to a standstill. I think right now that we're facing an international pandemic, which has very severe, human and health costs, that hit to sentiment is going to act as an even bigger drag on consumption and investment. And so as a result, how the situation unfolds globally is going to have quite severe implications for how China's domestic economy navigates this crisis. There's still a lot further in terms of how bad things could get. Under a nightmare scenario, we would assume that there's a second round of outbreaks in China to the point where the quarantine restrictions we saw in Q1 are replicated in the immediate future. That brings the economy to another standstill. It pushes government officials to focus primarily on just securing basic food and medicine supplies rather than encouraging a return to work. I think that the likelihood of that scenario is relatively low. It does seem like the epidemic situation in China has stabilized or at least has come under control. And so right now, it looks like things will be a bit more positive than that negative worst case nightmare scenario that I just laid out. But there is still a very big risk of that, particularly if, say, the rate of imported infections rises, or as migrant workers return to coastal factories, they bring the virus with them and cause a second round of outbreaks there. So this is definitely a lot of things to continue considering.
I've been tracking what the Chinese government has been doing, and very early on, in sort of first week of February itself, we heard Xi Jinping talk about the fact that while we need to be continuing with epidemic control measures, we also need to be looking at that poverty alleviation target, which is their 2020 target, that they need to be eliminating absolute poverty. So the economy already sort of became a big focus. And over the last couple of weeks, sort of every week, there's been a Politburo Standing Committee meeting at which they've been essentially talking about different measures. And some of the things that sort of come out from those meetings are that you're going to try and increase support for small and medium enterprises. You're going to try and, pump in more money in infrastructure projects, which is what one of the vice premiers, Han Zheng, was speaking about last week. And there's also sort of an effort at looking at differentiated policies for different regions, given that the impact of the epidemic is very different in Hubei it's very different, in Zhejiang it'd be very different, somewhere else it'd be very different. And therefore you need to have some degree of flexibility, and this doesn't need to be necessarily at all centrally driven in that sense. How does that sort of tension play out between local officials, central leadership? Because central leadership essentially will be giving people targets, right? That you need to have this much of business activity or resume 100% business activity or whatever. How does this sort of play out, and what are the sort of pitfalls of some of this? Do we see more data being faked? Do we see more data, do we trust the data therefore more? Or do we see these incentives existing, and because of this you may end up seeing some localities, some provinces pushing further ahead to open things up, only to then sort of taking steps back. So, for example, theaters in Shanghai, cinema halls in Shanghai, or schools in some other place. So, how does that sort of tension play out, or is it far more orderly than we sort of tend to? Because the external view is that it's far more orderly.
Yeah, I think that question of orderly is quite key. Personally, I think that it's more likely to be chaotic than orderly, and that's just because of the nature, not just of the virus, but also in terms of how you look at policy implementation in China. China is made up of so many different, essentially regional economies that take directives from the central government and then implement them based on their own understanding. And that's something that we've seen in the policy framework for a very long time. I think the Shanghai example you just raised in terms of cinemas opening and then closing again, that's a great illustration of how there's going to be quite a bit of difficulty in terms of harmonizing the understanding towards any attempts at normalization. I think in terms of looking at data quality, what we're struggling with right now is not so much the economic data quality. That's something that has always been an issue when you kind of come to terms with it, but more so the data quality around the reporting of the actual case numbers and things like that related to the actual epidemic. China recently has announced that it will begin reporting asymptomatic cases, for example, or people with mild cases, and that'll be quite important in terms of expectations for a second round outbreak. And that's not just important for China watchers, that's important for Chinese officials as well in terms of how they're going to respond to all of this. But I think there's been a lot of commentary saying how China is quite purposefully downplaying a lot of this. I think there is an element of that there. But on the other side, I mean, this is, a pandemic. There's quite a lot of chaos out there. I think that it might be a mix of, political orders at trying to minimize this, as well as just a genuine inability to account for everything that's going on. And that, to answer your broader question, that is inevitably going to complicate policymaking between different regions, because a lot of this is so much inherently tied to the epidemic situation based by region.
Yeah.
If we look as well a bit more broadly in terms of, say, the return to work directives that have been issued by the government, because the government is quite concerned in terms of normalizing business activity. Xi Jinping recently has somewhat reiterated the economic commitments that we have in 2020, which is a bit worrisome because if we are sticking to those commitments, it would suggest quite a worrying attachment to stimulus in order to achieve those targets. And that in turn carries a lot of concerns around, say, debt, for example, or exacerbating structural weaknesses. But that messaging is going to be quite difficult to implement as well. Just over the past week, we've seen videos and reports of various localities resisting migrant workers returning from Hubei province, the center of the outbreak, who were trying to come back to, their places of work, whether that's in the coastal factories or provinces outside of Hubei. And so that, I think, is somewhat of a microcosm, but it's illustrative of just because the central government is saying something doesn't necessarily mean that there's going to be coordinated implementation across different regions. And not even just at the provincial level or the city level, but down to the township level, the county level, all these various things, particularly where you still have so much kind of fear and uncertainty and misunderstanding attached to the virus, that's inevitably going to cause people to be a bit more cautious rather than, fully embracing any idea of normalcy. And so I think to kind of wrap up there in terms of this idea, that is going to really be quite a significant challenge for policymakers to address, particularly over the second quarter as global demand collapses.
I want to go back to one of the points that you made a little earlier, and I'm going to sort of tie two questions into one. So the first thought that I had was when you were talking about the GDP and we were talking about the figure of 1% right now. What is the sort of employment relationship with GDP in China, given that if there's a percentage decline, what sort of impact do we see in terms of employment? Because that's, like you had also pointed out, one of the big sort of, it's not just an economic criteria, but it's also a massive political imperative. Mm-hmm. And the second thing is, now that we're looking at sort of some degree of restarting of the economy with whatever local sort of factors at play come into play, what are the sort of, if somebody's watching from the outside, what are the metrics that you look at to see whether things are actually getting back on track? So that's two questions. One is about the employment and the other is about the metrics that one should keep a watch of.
Sure. So I'll start off with employment. Right now, it's been hard to really try and use our traditional assumptions to try and to manage this, just because of issues around data availability, as well as trying to map out the potential shocks. But I guess I'll cut to the chase. We are expecting an uptick in Chinese unemployment this year. I think our current call is about 7%, as opposed to generally 5% over the past couple of years, which in a country as populous as China, 7% is pretty heady. That's a pretty punchy rate. We're still discussing this internally. I think if the pandemic worsens, particularly internationally, then there's a risk that unemployment could rise by several percentage points even further, which could be quite disastrous. Now, that is assuming that policy measures aren't introduced to cushion that. But I mean, of course, you can't make that assumption. As you just mentioned, the focus right now is shifting away from, maybe meeting this growth target in 2020 to stabilizing employment, making sure that incomes aren't disrupted, things like that. And so policy support here is going to be inevitable, and that is going to put a little bit of a ceiling on any type of, uptick in that number. But it's going to be challenging. I mean, you think about a lot of the people who would be entering the workforce this year, recent college graduates, for example, that's going to be quite challenging in terms of, a labor market that is just going to be unable to absorb millions of people. And so that is going to be, I think, if you look at the wider landscape in terms of political and social stability, which we still think is controllable, but this could be one of the emerging challenges and one of the most severe challenges in the immediate term that policymakers are going to have to contend with. Now, to the idea of how to monitor any actual resumption in economic activity, that's something that we are struggling with as well. I think everyone's struggling with it. The metrics that people have mentioned over the past month, I do think are quite useful. Say looking at coal generation or pollution or traffic, all of these non-traditional measures. I personally, just because of my trade focus, I like to look at regional and global trade partner data as well. So trying to get a sense of how South Korea or Taiwan or Vietnam are doing, that gives a sense of the export-import picture, and that in turn can give a sense of, say, domestic manufacturing. And from there, you can draw, links to employment, things like that. And so you have to be a little bit creative in terms of looking at the official and unofficial data. I would say that from what we're looking at right now, it seems like the economy is roughly around, 3/4 in terms of normalizing, at 3/4 levels of capacity in terms of normalizing. And that's just based on the statistics that we've looked at, as well as benchmarking that we've done with other firms who engage in similar activities. I think what's been tricky is that there are these anecdotal reports that the government knows that these are non-traditional indicators that people are looking at. And so we've seen reports where factories are being told to keep their lights on, for example, or to increase their power consumption, to give the sense of a resumption in normalcy, when in reality, the output from these factories just isn't really matching what the power generation should suggest. And so there's going to be inevitably a mismatch. But one, maybe a bit of a perverse thing to say, is that once we start to see, the economic shock of the pandemic take hold globally, we'll have a bit more of an international benchmark to compare China's recovery with the recovery in other international markets. And that might give us somewhat of a better sense in terms of, trying to understand how quickly or how slowly or how genuinely the economy is coming back online.
All right, that's fascinating. My last question is sort of going to take off from this, given that, like you said, as sort of the economic impact of the pandemic globally as that plays out. So my last question is sort of a little forward-looking in terms of what are we likely to see in terms of, since you look at trade, also global trade, what are we likely to see in terms of the sort of global trade scenario? There's been lots of stress over the last couple of years with this trade war, and not just this trade war between China and the US, but also with the US and many other countries. Yeah. So we're at a point where sort of this seems like an inflection point of sorts, where we're going to be ending up in a place where more governments today are worried about their domestic capacity because they're looking at the kind of supplies that they need, whether it's masks or ventilators, and they're saying, well, we don't have the capacity for this anymore. So it's likely that, going forward, things like national security will encompass a larger set of sectors. And that might sort of have governments looking inward more when it comes to sort of free trade. What's your outlook on going forward? Let's look at it sort of 6-8 months from now, where most curves have been flattened and we're now at a point where, the world's back to its sort of sense of trading and doing business, but it's not going to be business as normal. So what's your sort of view on that?
Yeah, this is something that I personally have been looking at quite closely because of my focus on global trade. And looking at the 6 to 8 month timeline, I think that's quite appropriate, considering that the health shock is likely going to be very intense, but likely in a shorter time frame, particularly when you compare it to other shocks, such as, say, the global financial crisis, which exposed a lot of structural vulnerabilities and deficits, or deficiencies rather, which then kind of bled on and lingered into the resulting few years. So that intense shock, I think, is going to be quite critical. Our current forecast is we're now expecting a double-digit decline in global trade volumes growth this year. So that's similar to what we saw in the global financial crisis. In 2009, I think global trade volumes declined by around 11%. This year, these numbers are still quite initial, but we're expecting a hit of around 15%. But that's based on a number of different kind of assumptions. The first is that supply chains and trade links are just much more integrated than they were during the global financial crisis. And so any shock that we're going to see as a result of this, particularly when we're seeing entire economies shut down, that's going to really exacerbate a lot of this pressure. And so even a call of, say, 15% contraction in global trade volumes, that even might be a bit too conservative. We'll have to see how when we start getting major trade partner data for the first quarter, we'll have to try and model that out further. But generally, the trend looks quite bad. The second thing is that China's role in the global economy is just much bigger than it was during the GFC. And that ranges from exports and imports as a share of the total, as well as FDI stock in China. A lot of international companies have significant supply chains built out of China and the region. When the coronavirus shock hit in the first quarter, it was primarily a supply side shock. people were unable to just get the materials and components that they needed out of China to, meet their demand. Since then, the coronavirus has also evolved into a demand side shock with, major economies in Europe and North America now under lockdown, and that's inevitably going to lead to a collapse in external trade demand. But the supply side shock, I need to emphasize, hasn't really abated. We just saw Vietnam go into lockdown, I think yesterday. Malaysia, India have entered into lockdown. There's, signs that Indonesia might enter that too. Major areas around the world are seeing this replication of a shutdown in economic activity that, even with China coming back online, the fact that supply chains are still so diversified and dependent on so many different areas, that is inevitably going to keep those supply side constraints pretty tough. And on top of that, when you think about all the travel restrictions that we've seen, air freight, a lot of that is transported via passenger airlines. And so if passenger air routes have been suspended, that's inevitably going to hit those kinds of shipments. And some industries, such as electronics, are quite dependent on that. And so we're entering into this situation where we haven't really seen this before in terms of the just how much and how widespread this disruption has been, not just in terms of how quickly this has all happened, but also how intense it's been, and the lack of clarity in terms of when we'll be able to resume things. In the longer term, you mentioned the idea of protectionism. I think that is key. 2020 was coming off of a year of intense global protectionism led primarily by the US, and COVID-19 has kind of pushed more countries to revert to some of their kind of base instincts almost in terms of adopting knee-jerk policies that might be good for their own citizens, but not necessarily good for the international trade landscape. And I'm talking about things like restrictions on medical supplies or agricultural commodities to ensure that, your domestic citizenry has access. But say, India, for example, is a huge exporter of, pharmaceuticals. Countries like the US or in Europe, which depend on India, are going to suffer if export restrictions, are expanded or intensify. And so when all this is over, I think there's a very big risk that protectionism could linger, particularly because everything that we're seeing as part of COVID-19 is leading to somewhat of a backlash against globalization, both from kind of the international trade level as well as on the individual level. You see some of the stories coming out of China, this rise in xenophobia, that there's a big risk that this could translate into government policy. I think when you look as well at the WTO, for example, we saw the dispute settlement body go into paralysis late last year. I mentioned that because now there's less of a check on bad behavior in terms of protectionist elements coming to the fore. And so with kind of weaker, rules of the road, that means that the kind of temptation to engage in this kind of protectionist bad behavior is going to rise. And that's not even talking about everything happening with the US-China trade war. The trade war is somewhat on hold right now, but with everything happening, particularly in the US-China relationship, with both sides trading barbs over who's responsible for COVID-19, it's likely the trade war is going to come back with somewhat of a vengeance. After all of this kind of settles down. And we've seen a pause in the tariffs, but the tensions in technology, investment, finance, national security, those are continuing to kind of crystallize. And so that trade conflict story definitely isn't done. And so looking at 2021, I'm personally very cautious in terms of any bounce back that we'd have in sentiment in particular, because it's that sentiment which is really going to set the framework for how protectionism evolves or doesn't evolve moving forward.
All right. So with all of that glum stuff to look forward to, I have one last question. I'd like a one sort of sentence reply. Do you predict a V-shape or a U-shaped recovery? What's the kind of shape that you're going to see?
Well, I think quite safe to say U-shape. I think with the increasing risk of an L-shape recovery, particularly in a lot of places, or how some of my colleagues like to say, kind of like a Nike swoosh. Where you see quite a gradual recovery, but where output doesn't even return to levels before the crisis. That's going to be the biggest risk.
All right. Okay. Thank you so much, Nick. Thank you so much for joining us, and thank you so much for sharing all those insights. And you're in Hong Kong. Please stay safe. Please stay indoors.
Thank you. My pleasure.
If you liked our show, don't forget to check out other interesting podcasts on the IVM network. You can tune into them on the IVM Podcast app, ivmpodcast.com. or wherever you listen to your podcasts. You can also follow IVM on social media. The handle is @IVM Podcasts on Twitter, Facebook, and Instagram. And hey, If you'd like to dive into Takshashila's research on technology, strategy, and economic affairs, check us out at our Twitter handle at TakshashilaINST or our website takshashila.org.in.
Welcome to Peak Planet, a new podcast where we delve into the fallouts of the growth path that we, and indeed much of the world, has chosen. Sustainable growth is the buzzword. Until we nail that down, we need to ensure that we keep our population healthy and also have the resources for our increasingly urban lifestyles. I'm Karthik Ganesan, a researcher at the Council on Energy, Environment and Water, a Delhi-based policy research institute where for almost a decade we've been trying to explain and change the use, reuse and misuse of our resources. In the first season of Peak Planet, we take up air pollution, public enemy number one and an invisible one at that. Increasingly, the most important risk factor for adverse health outcomes, air pollution has become the most unwanted byproduct for an aggressively growing economy. Over 4 episodes, we find out how prepared our systems are to deal with this crisis. You can catch the entire first season of Peak Planet out now on the IVM Podcasts app or website, or wherever you get your podcast from.
Are you constantly seeking happiness? Wondering how to make the most of every day? How not to let your inhibitions stop you from achieving your goals? It's now time to get your A game on. It's time to unlock your true potential. Tune in to the Empowering series with me, Zarina Poonawalla, to feel empowered in all genres of life. From behavioral skills to management skills. From health to relationships. From mental well-being to emotional well-being. And of course, your finances. I've got you covered. With these tips and tricks from me, Zarina, and true life stories from my amazing guests, you're bound to bring your purest to the table. Tune in to the Empowering series with Zarina Poonawalla every Thursday on the IVM Podcast app, website, or wherever you listen to podcasts.